Welcome to Investors Insights, where today's topic is Recession Checklist. So a lot to cover today. Trey is going to talk about good news on inflation. Ty is going to cover a Recession Checklist that we look at as a portfolio team. So a lot to cover. But first, I think we need to talk about last week, which was one of the most volatile weeks in the market in some time, with big down days and some big rallies. As you can see in this chart, the broader stock market enjoyed a massive relief rally last Wednesday amid easing trade war concerns after President Trump announced a 90-day delay to reciprocal tariffs. And so the S&P ended the day up 9.52% on Wednesday, which is the biggest one-day gain since 2008. But it's important to look back at history to see what happens during market pullbacks like we've experienced recently. And while the relief rally on Wednesday was historic, history actually says early big rallies can be deceptive, and that all the clear signs that we see are ways off. That initial bounces and relief rallies have historically been kind of traps where the market trades back a few times after the initial bounce. But it's also important to remember that despite average intra-year declines of 14.6%, annual returns were positive in the last 23 of the past 32 years. So while last week was a little unique with the big swings in the market, it's important to remember that market pullbacks are historically normal. But yes, last week was pretty volatile. But Trey, you've got some good news for us on inflation. Talk about that.
Yeah, thanks, Bobby. I mean, it's easy to understand why what was the most important economic news point for the last few years got lost in the noise last week. Like you pointed out, the market was moving drastically one way or the other based on rumors and news reports, and everyone rightfully were focused on what the tariff flow was going to be, and that's what we were focused on as well. But we can't lose track that the economy is continuing to roll. We're not a single news item market. And so the inflation reports came out very positive, like you said last week. We've been following this for the last few months, and I'm going to pull up this chart we've updated each month. And here it's the producer price index, which is the orange line. That's what producers pay. And then the consumer price index, the purple line, that's what you, the consumers, pay. Something that we were concerned about was that producer prices had risen and were continuing to rise and were above consumer prices. So we were worried that producers were going to pull up the consumer prices because producers don't want to eat that difference. We got good news last month and good news this month. The March producer prices and consumer prices both fell on consecutive months. The consumer prices were actually negative month over month and up just 2.4% year over year, one of our lowest readings we've had. And what we really like to see is it happening for multiple months. Now, this is backward looking. This is March data, so this does not include current, potential, or future tariffs. But what's important is to understand the economic environment we are in currently going into the uncertainty. And what's positive is there was a risk that going into this, we were in a higher inflation environment. That's what the data was a couple months ago. And so it's good to see that going into this uncertainty around tariffs, we are in a lower inflation environment and a falling inflation environment. The biggest drop in consumer prices year over year and month over month was in the transport. So that's very good because that will bleed through the rest of the economy because all goods and services have to get to you some way, and that's usually transported. And so that was a good number. That's a good leading indicator for future consumer prices. So all in all, very positive. We would expect this to bleed into lower interest rates. We didn't see that last week, but again, the stock market definitely was focused on the news, and the bond market, like any other market, is driven by human behavior and can become a prisoner of the moment. And we saw that with interest rates spiking in spite of lower inflation. So it's something we're going to keep watching, see if this continues and what other indicators. But all in all, fairly positive and something that we're going to have to keep track of.
Yeah, again, that's great news on the inflation front. And then Ty, we as a portfolio committee meet every week and discuss a lot of topics. And one of the things we look at is a recession checklist. Talk about that for a minute.
Yeah, as you alluded to, we always look at this. Luckily for us, our research partner, Strategas, keeps a great checklist of recession, and they base it on leading economic indicators. So they're trying to, predict recession. Right now, 4 of the 8 items are checked. And so as you see in this chart, here are the items: single unit housing, non-defense, capital goods spending, consumer expectations, employment, weekly jobless claims, ISM new orders, the 2 and 10 year spread, B, AA spreads, which is more like high yield, and then financial conditions. And so, as we alluded to, right now, we're not, we don't believe we're in a recession. Not all of our items are checked off, only 4 of 8, something we're currently keeping an eye on. But it seems like as we're going through things, that's becoming more of a discussion. The good news is employment is strong. Orders are strong. That could be because some companies pulled forward to avoid tariffs, but overall, still a strong reading. In the 2 and 10 year curve uninverted. Now, to be told that it was inverted for a while there, and we did not have a recession, so maybe that indicator was a little bit off. But overall, we're still holding steady. The reason we want to look at this is to predict going forward, because as you see in this chart, when the NBER announces a recession, it's usually already passed us. Stocks have already bought them. We've already had the negative GDP. It's kind of backward looking. They say, hey, we were in a recession 6 months ago. Well, thanks for the news, but stocks are already back on the up and up. And so, we try to keep this checklist handy. And I know that'll cause a lot of questions, a lot of people asking, but it's something that we're always keeping an eye on. And right now, we're not overly concerned or pressing any panic button.
And we'll continue to keep our viewers updated on the recession checklist and those boxes being checked. And again, good news on inflation. We're going to keep you updated on the market volatility. There is some progress being made with the trade talk, so that's positive. If you have any questions, we'd love to hear from you. Call us, email us. Have a great week. Thanks.